everybody, this is Rob Keynes of goldsilverpros.com. It is September 21st, 2021, and I'm going to be doing a quick review over what's happened in gold and silver lately and focus on what the long term looks like in gold and silver, because I think that's what really matters. And then I'm going to bring you a review a lot of you have asked me for on a company I've talked about before, which is GoGold Resources. We're going to do a fairly expansive and critical review of their operations, of their finances, and show you why or why not you may want to consider investing in the company. So stay tuned for that. Before we get into GoGold, though, we're going to hit the gold chart. Now, I've seen a lot of panic in the precious metals markets about what is happening to the gold price and especially the silver price. And yes, these are short-term price fluctuations. And no, I don't think it changes at all the long-term picture. But I wanted to do a quick review of gold and silver, looking at the charts and indicating why I don't think anything has really changed, even though short term we have some weakness in the prices and the overall price movement. So let's start with gold. We still have our cup and handle formation. Here is the cup. Here is the handle. It did touch down on about the mid 1600s, which I said is probably about the bottom. It would reach somewhere between 16 and 1700. That was about the case as it touched on about 1650-ish. Now we're back up right now to about the mid to high 1700s. And so overall, gold is sitting within that range of the handle pattern that we saw. I think this is still incredibly bullish over the long term. And I think that we still have this bull flag pattern that we saw when the handle was basically reversed, and you see a series of higher lows dating back until about March, April timeframe of this year. So we've had higher lows dating back to them. Now we have been range trading the last couple of months, and this has caused people to get frustrated because they're like, where is gold going? Why isn't it seeing the worldwide risk that we're seeing in the banking system with Evergrande and all these things? It's because we haven't had a really big event. You know, the gold went up here because we saw increasing risk. We saw a correction in the stock market, 20% correction in the stock market. We saw a lot of other news come out, which caused gold to rise. Since then, we haven't had that big catalyst. We haven't had that big news. You're seeing all-time highs in the stock markets, partially or largely because the Fed is printing a lot of money, which is flowing into the equities markets. We've documented that, and people are taking that momentum and trading on it. Then you have groups like Wall Street Bets and others who are trading some of these momentum stocks and even getting into highly illiquid stocks to try to boost up the price. In other words, everybody's looking for returns. So the general money is flowing to where the returns are going, and that is in the stock market. So right now, gold and silver is not getting a lot of love in terms of the derivative pricing. And we also know that there's incentive for governments and certain other parties that benefit from governments to keep gold and silver price down because they don't want it to rise too fast. For gold, it's because it is an indictment of how bad the fiat monetary systems are across the world. And for silver, it's because they need it for industrial use. So until there is a big financial catalyst, you're not going to see a sharp rise in gold and silver. But it is coming. The technical charts indicate it is coming. We've got a bullish pattern here, ending what we think is going to be the cup and handle pattern. This could continue to trade for a while. You see basically it consolidating. You see higher highs and higher lows and lower highs consolidating into a flag pattern, which usually means we have a tensioning in the system to where eventually that gold and silver is going to launch one way or the other. We think the long term is going to launch. I also showed you last week how we saw the same pattern, the same sort of a wedge triangle forming in the open interest in both gold and silver, meaning the shorts were going more long and the longs are going more short till they converge towards zero. Now, this pattern could continue for another couple of months, and it's entirely possible. The more that pattern continues, the more bullish I get, because where is gold going to go from here? Is it going to go down? Do we have less contagion, less money printing than we had before? No, it's going to go up, but it's basically that consolidation of positions to almost a net zero position. And then that's going to clear the way for gold to go where it needs to go, which is this is my belief. We'll see what is going to happen. That's what I'm seeing in the technical charts. Now, as far as silver goes, you can draw a line right here at 22. That is sort of the line of last resort. I was on last week with Liberty and Finance, and Steve Penny was a guest on there as well. And he was talking about how you could see it going down to 19. This is my resistance line at 19 right here. And that's based upon what we saw back in 2019 and even dating back to the 2009 to 2011 timeframe. That is a significant trading point for silver, is about 19 to 1950. In that range, there's a significant support and resistance line there. If silver penetrates or shoots below $22 support line, if you will, which it's held dating back to last July of 2020, over a year, about a year and what is that, about 3 months, about 2.5, 3 months. If it goes down through 22 and stays down, now it could challenge and come back up and challenge and come back up. That's usually what happens. It'll challenge a line a couple of times. This is the third time it's getting close to that 22 dating back to last October. Now, it didn't actually touch 22 last October and last December, but it got close. So it's kind of challenging 22 for the first time. If it shoots through 22, it could fall to 19. Because remember, these are derivative markets. It has nothing to do with physical trade. And people trade these markets based upon, what they perceive to be the next technical support level, because this is paper trading. It could go down to 19. But to me, that's extremely bullish, because if it does, gold's going to lead the way back up. Gold almost always leads silver in major bull markets, almost always. Gold will go up first. Silver will go up more violently. For silver to go up more violently, it's probably going to fall more relative to where gold is. It already has fallen more relative to where gold is, but it could fall more. That's not a panic situation. That to me is a back up the truck situation and get into the physical metals. Because again, we know there's a physical silver shortage. Corning Silver Institute, they expect over 1 billion ounces to be utilized this year in the market for the first time in history, less than 1 billion ounces to be produced. We have a short-term supply deficit. And to get those supplies out of strong hands in a lot of the depositories and a lot of people holding that, for example, it's going to take higher prices. So people aren't going to let go of silver if it comes down to 19. That's going to put even more pressure for silver to reverse to the upside, because you're going to have those physical supply shortages, and you're going to be bumping up the top area at which some of the more expensive silver miners it costs to mine the silver. I think that's somewhere between $15.50, $16, $17. So if you get down to 19, there's not a lot of profit in mining silver at that point. That's going to cause the price of silver to come up, because the miners aren't going to go out of their way to create more when it's trading just above what their cost is. And you're not going to see people giving it up that are strong holders, especially on some of these depositories. So that is going to have like a cold spring effect of what's going to happen to the price of silver, or we're going to get into supply destruction. The mines are going to stop producing, and it's going to get even worse. And that won't last for long. It never does in the commodities, especially an important one as silver. And again, we're still very bullish on gold. I see a very bullish chart on gold where silver has more been sideways dating back a year, about 14, 15 months. So I'm not panicked. I'm not worried. The macro situation has not changed. It is still profitable for the gold and silver miners at current price levels. So we're not in any sort of dire situation. And the technical chart doesn't look bad, honestly. It's still bullish. And this is something I've been talking about for over a year. It's still bullish in gold, and gold will lead silver, and silver will rebound when gold rebounds, because what happens is coming into silver will be all of that monetary investment. So I know a lot of people are panicking, saying gold and silver are the worst investments ever. Actually, since 2000, gold is actually still better than the major stock indices, the Dow, the S&P, and the Wilshire. Now, if you had invested in specific stocks, you could have beat those indices and even beaten gold, but the average passive investor would have seen better returns in gold dating back to 2000, even still at current price levels, than they would have in the major stock indices. And same thing with silver. They still would have seen better, even though silver's retraced or retracted more than gold has as of late. But I'm not worried. The macro picture is still strong. The physical demand picture is still strong on silver. Gold is still sitting in a bullish chart that I've been talking about for over a year. I'm honestly not too worried about it. I'm not that worried about it. We'll see what happens, but I think it's still a good time to be in gold and silver. And when you see, when you see a pop to gold to about 2060, like it happened, this pullback is completely and utterly normal. Okay. And this is not any standard deviations greater than what we would have seen in past, bear responses to bull markets, or you get the bull market, you get a pullback, you get another leg of the bull market, pull back, another leg. So this pullback is not abnormal to what we've seen before. And silver is a little bit more volatile because it's industrial and monetary, but we're not seeing that monetary investment right now, like we were saying when you had the run up last year. This is monetary investment, and then it's range traded, and it's down on the bottom end of that range right now, but it's range traded since then. Okay, but it's not so thus far penetrated 22. So yes, there's some weakness in investor sentiment from a monetary sense, but again, gold's going to lead silver in monetary demand. Trust me on this. This is historically what has happened. So silver is just range trading at the bottom of its range, while gold gets up and going, when gold pops, silver will come with it. I'm not too worried about it. All right, so that is my gold and silver forecast, my outlook, for the next couple of months, we should expect to see, and why I'm still bullish on it. I don't worry about these temporary pullbacks in a bull market. They happen, they're normal. Go graph this against the 1980s, and you'll feel a lot more comfortable with what's going on in gold. It's not abnormal at all what we've seen in the past. All right, now I want to talk about GoGold, because I've gotten a lot of interest in GoGold. My investors want me to look at this. This is a type of analysis I'm going to do for GoGold. I used to do on Seeking Alpha, but instead of in written form, I'm going to do it in video form. So we can go a little bit quicker and show a little bit more data. So this is GoGold, which is a gold producer, and the ticker is GLGDF here in the US. You can also get it on the Toronto Venture Stock Exchange, I believe. GoGold has been up since about March of 2020 quite a bit. It was trading there at about the low price was about 27 cents. Now it's about $2.30 American. It's had a nice increase. Now it did come down a little since its previous high on, what is that, June 7th of, I want to say about, let's see if we can get a price there, 280 something. Get my video out of the way, 281. So it's come down about 50 cents, but it's still in its bull move, and GoGold has increasingly better news. So I think some of this lag in price or weakness in price of GoGold is because gold and silver have gold especially has kind of pulled back a little bit normally in a bull market, and so the stocks will pull back as well because a little bit less profit on per ounce mined, but they're still making money here. They're still making plenty of money at the current gold price of like the 1780s where we're sitting right now. And again, we're sitting at the support line. So this support line is higher than the previous high that it reached January 4th of this year. So we got a nice little support line going here. It hasn't penetrated that support line. It's actually got room. If you see here, it's got quite a bit of room. So it's bouncing around here, but it's still in a very nice, healthy range. So from a technical perspective, GoGold doing just fine, and they've had handsome returns for investors over the last year and say 9 months. It's been a good stock down. Now, as I said, they're a producer, so they make income. This is not just an exploration company. They are exploring, and they're finding even better resources than what they're currently mining, which is why I see tremendous upside. But they are a miner. So looking at their income statement, they've had increasing amount of income. This is a trailing 12 months. So this is through today. Basically, these numbers are in thousands. So 56 million over the last calendar year. The fiscal year 9/30/2020 back to 9/30/2019, they made 39 million. So increasing revenues, increasing profits as well. Gross profit is up to 22,646,000 the trailing 12 months from today. Operating income is there. The net income 52 million. So that's better. So the trailing 12 months have been really good to the company. They've done very, very well. They made some nice interest income and things like that. So they're doing very well. Let's look at their balance sheet. So looking at their balance sheet as of 9/3/2020, now this is last year's data. It's what's available right now on the annual. If you go to the quarterly, we can do that too. But if you go to the annual, September 30, 2020, that had 183 million in total asset, 183 million in total assets. Total liabilities, only 12 million. Total equity is 170 million. So this is a very strong company. And if you break down some of their liabilities, current liabilities only 8 million. Non-current liabilities 4 million. So there's a little bit of debt there, not much. They have plenty of cash basically to get out of it, because current assets 73 million. So cash and liquid assets was enough to pay off the debt. The cash was 52 million. So if you take that 52 million against their total short-term liabilities, 8 million, they were 44 million up. That was as of last September. So they're doing just fine. Net debt very low, 1.6 million back then. Tangible book value 170 million. So from a basic accounting perspective, very strong. Now let's go to quarterly and get more recent numbers. This is through June 30th, 2021. Total assets 224 million. Current assets 95 million. 73 is cash and cash equivalent, so very liquid, with some 12 million in receivables, 12.43 million in receivables. Non-current assets 128 million. That's long-term assets. Current liabilities only 10 million. Total non-current only 7. So total equity is up to 206 million. So they're continuing to build their total equity value for their equity holders in the company with a very strong balance sheet, very strong cash position, very strong current asset position, minus their debt and short-term debt and long-term debt. So total capitalization is very good. Working capital is very good. Tangible book value up to 206 million. So you see that these are all rising numbers. So the company has been doing well from an asset perspective, from a cash flow perspective. And further, I'm going to show you where they're doing really well from a exploration perspective, and they're finding much more resource than they're currently mining right now. So the news continues to get better for GoGold. Let's continue to look at their financial statements here, as shown on Yahoo Finance. Trailing 12 months operating cash flow 14 million. That's up from previous year over year back on September 30th of 5.9 million. So very good. Investing cash flow, they've invested in their project. So from continuing operations, and that's like drilling and exploration. So in other words, what they're doing is the cash flow they get from their mining, they're using to pay for exploration. They're not taking on more debt necessarily, super diluting shareholders. You see, if they did get some financing cash flow, most of that is going to be from stock issuance. So they have diluted the stock issuance, but it's given them that cash position. Why? Because we're going to see in a moment where they need that cash to go develop their next project, which, by the way, is bigger than the one that's providing them all the money that they get right now. So they have positive cash flow. They have a good cash position. They have tons of shareholder equity that they built for their shareholders. So even though they've done some dilution, that shareholder equity I showed you that has been increasing over time, that book value that's been increasing over time. If we go to the quarterly, it's even better. That book value, that's what's keeping their share price up. So even though they diluted a little bit, the share price is still up because they've created value. That's how that works. So people say, oh, they're issuing shares, that's bad. Well, not if you're creating more shareholder value, more book value. You've got more book value, you can take on more shares and still keep your shareholders happy. And they're doing that in a way to increase the reserves so that they can work on this next deposit, which is even bigger than the one that they have. So that's their financials, and their chart all looks pretty healthy. So what else do we need to know about them? Well, they are producing at Peral, which is one of their projects. That's their producing project. And here's a news announcement. It came out on July 7th about that. They reported production for the quarter ending June 30th of 575,000 silver equivalent ounces, consisting of 315,000 silver, 3,170 gold, and 120 tons of copper. So they're polymetallic, and it's silver, gold, copper. Copper's doing very well price-wise. Gold is still doing very well. Silver is in a range, but it's still very profitable at Peral to do it. So they're making profit on all of this. So if you look at their overall production, it's up. If you look at June 2021, 315,000 silver production, ounces, 3,170 gold, and 120 tons of copper. So equivalent silver, 575. So Peral is winding down a little bit, but not much. It's pretty consistent production, but eventually they're going to mine all of that out. So they wanted to go explore for more, and that's what they've done. But more on Peral. Peral did in that same time frame, $7.5 million of free cash flow. So again, they're generating free cash flow off of Peral. It says here they have a record revenue of $15 million from the sale of their silver equivalent ounces, 563,000 silver ounces. Statement from the company. Peral had another great quarter, generating a record 7.5 million in free cash flow, or a record 27.1 million for the last 12 months, a trailing 12 months. The funds are being reinvested into Los Ricos, which I'll get into in a minute. I'll explain what Los Ricos is, which we believe is generating great value for our shareholders. Brad Lingiel, President and CEO, stated. Renegotiating the Peral takeoff agreement provided cash savings 194,000. So what's a takeoff? A takeoff is kind of like a stream in a way. It's another type of way in which prior to production, and sometimes prior to even building the mine, the actual mill that's going to produce the mine, they agree to sell at a fraction of the actual value of the precious metal, to somebody, and then that person gives them financing. So it's kind of like, in a way, a royalty or streaming deal, although generally sometimes shorter term and different terms can be negotiated. As it says here, I think it was they renegotiated the offtake agreement. Here's the offtake agreement. It resulted in 3.6% lower realized prices for gold and silver as compared to spot market. So they took a hit of about 3.5% off of spot to do this offtake, which helped them finance the building of their Pearl mine way back when. But they amended it to save $194,000. So they agreed to sell the counterparty 2.4% of all the refined gold and silver at Pearl over the remaining life of the operation, equal to 30% of prevailing market price. So they're going to get 30% of the value of 2.4% of all the gold and silver produced to compensate that company for providing money to help them build Pearl. Now, it's only 2.55% or 2.4% of all the gold produced. It's not going to affect them that much. So that means that they're going to get better than the 3.6 discount on all the gold and silver they're mining. Essentially, they're taking a small percentage of discount on the gold and silver they're mining to have financed Pearl without having basically to take on a bunch of debt. And that's how you can finance a mine. It's kind of like a royalty or streaming deal. It's a takeoff agreement or an offtake agreement. And essentially, it was a good deal for them because they're generating even at a slight discount that gold and silver they get from spot, they're still generating free cash flow, and that goes into helping them finance what else they're doing. What else are they doing? That's what we're going to talk about. So let's talk about what they have at Pearl. So Pearl, they have proven and probable reserves, silver equivalent ounces of 31 million. You see that number right here, 31,585,000. The gold equivalent, 358,000. So the gold and silver independent, 171,000 gold and 116,570 silver. So that's what they have in their reserves. That's proven and probable. Those are reserves, not resources. Those are reserves are things that are highly considered high quality reserves because of the amount of drilling and exploration you've done. You feel like you're definitely going to get that. So what about Los Ricos? So let's look at Los Ricos. So they have Los Ricos south and north. At south, they have a mineral estimate. And north, they basically have drill results. We'll get into that. So Los Ricos south and north are bigger than Pearl. So think about it this way. GoGold is making money off of Pearl, positive cash flow, increasing their revenues, increasing their shareholder equity. And they've got Los Ricos, which is actually bigger, which they're exploring right now, which is going to take over when they're winding down Pearl. And so they're going to make even more money. So think of it this way. They were this tier of a producer before, making positive cash flow. They're using that to finance that positive cash flow in terms of shareholder gains and in terms of cash flow, the exploration and the build eventually of Los Ricos. And Los Ricos is going to bring them up to here in terms of their cash flow. So that's going to generate what? More cash for the company, which is going to result in more shareholder value, which is going to raise the price of each share for people that are in there. In other words, as long as they execute on Los Ricos, and that's the thing, as long as they execute on Los Ricos, they're going to go from this stock price up to this stock price. Of course, we'll see what that valuation is when they do their updated technical report for Los Ricos, when they get all that explored, but it's going to raise their share price and raise value for people that own their shares because you're getting into a bigger, more profitable project. And that's what you want a company to do. You want them to get into a project, be profitable, use those gains, shareholder and cash gains, to get into another project, be more profitable. You stick with them as a shareholder, you're going to realize that shareholder value. And that's what's happening with GoGold. So at Los Ricos, they have measured and indicated silver equivalent ounces of 63,677,000 ounces. Now, when you look at Pearl, let's go find Pearl. Excuse me, guys. I got to get all the way down here. When you go to Pearl, their proven and probable was at 31 million. Okay. The Los Ricos South by itself, and they're not done exploring it, is at 63. It's double. Now, it's measured and indicated, not proven and probable. So a little bit less on the scale of certainty in terms of these resources. That number could move up or down as they do more infill drilling, things like that, but it's still double the resource. And inferred, they got another 19.8 million. So you're sitting at about 80, what is that, about 82, 83 million measured, indicated, and inferred ounces at Los Ricos South, and they're still exploring it, okay? And then at Los Ricos North, they have some additional resources. They also have resources at Esmeralda. So here's another deposit. Esmeralda, they have 13. So Esmeralda is a little bit of a smaller project, but it's still 13.3 million ounces of silver. So overall, what do they have? Well, let's go to the table. I'm sitting here at their company presentation on GoGold Resources. You can right there. And essentially what we have is you have 108 million total measured and indicated across all their projects, Los Ricos, Pearl, and Esmeralda, of silver equivalent ounces. So if you just look at Pearl, the one they're producing from is this one right here. Just from Pearl, you're looking at 31.5 million ounces. This is actually proven and probable. And if you look at adding in Esmeralda and Los Ricos South, you're looking at 108 million. So that basically more than triple the total amount of resource by adding Los Ricos and Esmeralda. Los Ricos is the big one, south, and then they're also drilling Los Ricos North, which I'll talk about here in a minute. So the company has more than tripled, almost quadrupled the resource. By the time it's all said and done, probably quadrupled the resources by getting Los Ricos. And that's the value that the company brings. Now, I want to take you to what they've done in the past. They had Santa Gertrudis. They sold it. They were in $20 million, and they sold it to Agnico Eco Mines for $95 million. So this is optionality. So GoGold's an optionality play. If they find a project that they don't want to mine, they can sell it. They sold one to Agnico Eagle for almost 5 million, or I'm sorry, 5 times gain, or 500% gain 3 years after they basically developed it. Now they're in production on Pearl, and they're doing Los Ricos, and it looks like they're building up Los Ricos. The initial PEA for Los Ricos is $295 million, what they're going to make. Net of net present value of the cash flows of that mine according to their mining schedule, 295 million. And I want to say it was something like a 44% rate of return. That's a nice, healthy return, a very healthy return on a gold project. So Los Ricos is looking, south is looking very nice, okay? It's looking very nice. They've shown that they can option off a project to somebody else and make a bunch of money. They can produce and make a bunch of money and drive value. So this company knows how to drive value a bunch of different ways. So what do they have here? They have a news release from Los Ricos North. I said that they were drilling Los Ricos North, the north side of that Los Ricos. And here's what they got as of September 15th. 2,274 grams per ton silver equivalent. That's gold, silver, and copper, I believe, is probably in there as well. It just says gold and silver here. And 111 grams per ton silver equivalent over 58.8 meters. So over about a meter, they got 2,274. So this is a nice little segment of that drill intercept. Here they got 58.8 meters over 111 grams per ton at alpha 4. So what that means is for almost 60 meters, they're seeing 111 grams per ton silver equivalent. That's pretty healthy. So over 58 meters, let's say you drill a hole in the ground, right? Over 58.8 meters of that drill, you saw 111 grams per ton gold. Now, what they're going to do is they're going to drill a bunch of places and they're going to find out where these veins are. And they're going to estimate if we go mine those veins, how much silver per ton can we get out? How much does it cost us to mine per ton? How much is silver going for? Therefore, how much money can we make? So as they continue to get the drill results and they get these intercepts and they figure out how much resource is in the ground, they're going to do a preliminary economic analysis on this at some point and figure out how profitable it is. Where are the really rich parts of those drill holes? Can we map out where that vein is across our drill holes? Can we estimate with some level of reasonability, depending on how much exploration we've done, of how much silver flakes are in the ground per ton that they're going to pull up? Where do they need to mine it? Where's the highest grade within that vein system? And then they're going to say, what are our costs? And they're going to come out with preliminary economic analysis. This is what we think is going to cost us. This is what we think we have. And then they're going to come up with a feasibility study and putting more drilling into it and more exploration into it, more analysis into it to see, is this a bankable project? Okay, that's how it all works. But right now we're seeing really good drill hole intersections. We're seeing very healthy. I'm just going to do silver equivalents. This is silver and gold together. 255, 1,043, 2274, 1,002, 1,009, 551, 353. All these numbers are very healthy numbers. When you get those types of intercepts on drill holes, it means you've got a very robust vein system down in there. And then you're going to have enough resource, hopefully, to mine it and get enough silver to have more value than it costs you to get it out of the ground. Now, the PEA for Los Ricos South is at 1,800 gold and $24, I think, and 40 cents silver. We're almost there. And I think with the rebound in gold and silver coming this year, we'll be there. So the assumptions made in Los Ricos so far are at about current gold and silver prices, give or take. So you can assume that, yeah, so far it looks like these are going to be profitable projects, especially Los Ricos North, South, where you have the PEA. Los Ricos North look like it's going to have similar types of results. So it looks like North is looking a lot like South. And all this does, when North looks like South, you're just expanding your zone, meaning you got more total resource. So Los Ricos North, more total resource to add to Los Ricos. Looks like they're going to add to that 295 million net present value of the project that we talked about before. So let's sum it. The company's doing really well. They have good financials. The stock price reflects it. Good financial numbers. They're reporting record profits on what they're mining and record amounts of silver equivalent being mined. They have they have several nice projects headed by Pearl, which is making them money. Then Los Ricos South, which has a very positive PEA of 295 million. I think it like 44% return on investment, I believe, was what was in their PEA, if I remember. They're now drilling out Los Ricos North and expanding the whole Los Ricos amount of recoverable ounces. They're going to update their feasibility study at some point for that. I would assume, I think when I talked with the company, it was going to be next year, if I recall. And then, so they're going to have more resource in the ground. Eventually, they're either going to option it off or sell it, like they sold Santa Gertrudis, and make money off of that and bring shareholder value in terms of a big lump sum cash flow, or they're going to go mine it and they're going to increase shareholder value that way. Now, what are the risks? To be fair, what are the risks to this project? You have to talk about risk. What are the downsides? The downsides are that they may have to dilute the shareholders a little bit more to raise some money. So that means share price could temporarily fall. That will be offset by the fact that Pearl, different than a pure explorer because they're producing, that will be offset by the amount of money they're making on Pearl. So when they make money on Pearl and they build their cash position, you see when you went to the balance sheet, let's go back to how balance sheets work. If you go back to Yahoo, we'll go back to Yahoo Finance. Let me get the meeting controls out of the way. Go back to Yahoo Finance, go back to their balance sheet and go back to tangible book value. When you look at tangible book value, let's go to the quarterly. When you have an increase in total cash position, okay, without increasing debt, it creates more tangible book value. That tangible book value provides more per share value to each share issued, meaning the price should go up in the market. The market should value that. So just because you're issuing shares of stock is not a bad thing if you're creating value through having more cash. As they're mining and getting more cash, it creates more shareholder value. So that's going to help keep the share price up so that they can go build that next mine, or they could just sell Los Ricos if they wanted to. That's what's going to happen. But there is risk that they have to dilute some shares and they're not making enough at Pearl that it temporarily brings that price down. Now, I don't think it's going to bring the price down back to around, 40, 50 cents like they were trading, a year and a half ago. I think it may bring it down, another 20 or 30 cents, but that's going to go back up. Why? Because the market is going to see the value in the increased resource that they have. And this is where we think the real sweet benefit to owning a mining company like GoGold or any producer is when you have that rising gold price, that's free money, because all the assumptions we're making right now on GoGold, all the analysts are making, and they're covered by several analysts in the market. And you can get those analyst report if you subscribe to them. They all have a very bullish share price, much more bullish than what the share price is right now in GoGold, because they're pricing in what they think is going to happen even at current gold prices. And as they expand that Los Ricos deposit, that brings more value on the books to GoGold, because they know that either they're going to sell that or they're going to build a mine, they're going to mine it, and they're going to make money. So the value is going to go up. But that's before the rise in the gold price. We are bullish on the gold price. We think that's going to increase the price of all producers that are profitably mining gold and silver, whether it be First Majestic, GoGold, pick one. It doesn't even matter. Pan American, pick any producer. Northern Vertex, all of them are going to go up as the gold and silver price rises. Additional risk for GoGold is that we get into a situation in which inflation raises cost. Inflation's a risk. Inflation can raise wages. Inflation can raise fuel prices. Inflation can raise all those things. But along with that, gold is a good barometer of inflation. When inflation goes up starkly, gold, over the medium long term will go up also. So even though we could have inflation short term in the cost structure, getting the gold out of the ground, the gold and silver price should eventually follow that as well, especially gold, because gold really is an analog for risk in the system and for inflation. And inflation will drive up interest rates. And as interest rates get driven up, you'll see people raise the gold price as well. Gold price will rise. So I think there are some mitigating factors to the risk at GoGold. I don't see the same risk factors I see with a traditional explorer that doesn't have a producing asset. Because a lot of times what you'll see in that on the Lassonde curve, you'll see the exploration, then you'll see a lot of apathy set in as they do their PFS and their PEA and talk about the mine decision, and then it goes back up. But that's an explorer. GoGold's a producer, so they're making money. So there's not going to be apathy as they decide whether to mine it, because they're still making money. So shareholders aren't going to jump out and say you're not making money because you're an explorer. They're making money, who happens to be exploring and have found a bigger deposit, which could either sell that deposit or mine it. And so that stock price is not going to have this big dip like you see on the Lassonde curve. For explorers, it's going to continue to go like this. And then once they make that decision whether to mine Los Ricos or to sell it off, it's going to go. Now, how much it goes up this way is dependent upon whether they sell it or they mine it. Those are different profiles, and we'll watch the stock as that happens. But to go back and reiterate what I see, not only in GoGold, but let's go back and talk about gold and silver. Gold this is not negative on gold. We see a consolidation flag pattern happening here, which means it's going to make a big move at the end of a very bullish cup and handle. I've said this for the last year and a half. This is an incredibly technical setup for gold, and that's without Basel III or the financial resetting the price of gold. This is under current regime, current laws, current everything. Not talking about any of those other changes in the gold market that we talk about a lot. Just saying, if everything stays the same for the next 2 years, we expect gold price to continue to go up, from a technical perspective and from a fundamental perspective. Silver will follow. Silver is not broken to the downside where we're overly concerned about the silver price, but even if it does, remember, silver is demanded more than it's produced this year by the miners. To get that remaining silver and above ground stockpiles out of the hands, you have to have a rising silver price, not a falling one. So that would actually exacerbate the available silver if the price falls. It's going to force silver to eventually have to come up because it's industrial. It's not just monetary. That's the thing people forget about silver a lot of time. We look at, silver squeeze and all those monetary events where people are putting it into as a monetary investment. The industrial supply puts a floor on when silver eventually can go to before you have supply destruction. And in any commodity that's used industrial, I don't care what it is, uranium, you saw that with uranium going to the 20s, now popping back up to the 40, 50 range. When there's enough supply destruction, that price has to rise. It has to rise, or there's nothing produced and the world needs it. So much like we need uranium, we need oil, we need wheat and sugar and all those things, we need silver industrially. We need it. So there's a point in time where it's going to have to go back up because of physical factors in the market. So I'm not too worried about silver long term, but especially with this very bullish gold chart. And gold always leads silver. That's what I want to reiterate. So I wouldn't panic at all in these markets. I'm not too worried about it. I know that you guys sometimes will panic when you see these short-term price swings. In gold, it's normal. You had a very massive, quick bull market, hit it up to 2060, and it came down for a while. That's what happens. But you've got that wedge pattern forming where we're at an inflection point, where as it gets closer to that chart looking like this, not only in the price, but remember in the derivatives trade, the COT report that I've been showing you guys, that means you're going to have an inflection point. You're going to have less resistance to that gold, boom, shooting back up. And that's without any sort of black swan event. It's going to shoot back up. Look at the debt levels, look at the fiat printing levels. It will shoot back up. I think it will. Now, it could trade sideways for a while, but I don't think it's going to be there forever. All right, that's going to do it for today's video, guys. I gave you a gold and silver price chart review. We talked about GoGold, the producer, the advantage of owning a producer who's also exploring and finding bigger and bigger assets, how that increases shareholder equity and how that increases cash position, how that's bullish. We talked about some of the risks with GoGold, which are inflation. It doesn't execute on its property at Los Ricos. The PEA or the PFS doesn't come out as positive as we think, although certainly at the drill results they're finding, that doesn't seem to be a risk. They still need to de-risk in some aspects Los Ricos, but they're going to do that over time. I'm not too worried, but look for some short-term downside as they continue to spend some money to develop that. But long-term, tremendous upside, because that project is over 2 times the size of Peral right now, which is a producing project. So this is where you might trade a little bit of short-term, slightly downward price movement for long-term potential gain. This is a group that's proven it before, so no reason to believe they can't do it, but we'll continue to watch them and their drill results, broke down their financials, told you how to read that, gave you all of the details about how to really value the stock and how to see it. Now it's up to you guys to decide whether you like it or not. Up to you. I'm pretty bullish on them. That's why we had them at the conference. I really like what they're doing. But we'll see. They're always risky mining stocks, and we'll see. But I think we're at an inflection point in gold and silver where we're getting to the point at which it's going to break out of its doldrums. That would be incredibly bullish for GoGold, First Majestic, any producer, even the explorers, you name it. Silver Tiger, Silver Crest, Impact Silver, Pan American, all the royalty companies, Franco-Nevada, Sailfish. All of those guys are going to do very well when that gold and silver price rises. So I think we're at the beginning of the uptrend in the commodities markets. We've already seen very strong increases in lithium and copper and zinc and for an extent there, iron ore as well. As pressure comes on shortages in those markets, that's going to hit silver and it's going to hit gold also from a monetary perspective. That's coming. I think that's what I believe is coming. So don't worry too much about short-term doldrums in the precious metal. This is a long game. This ain't your 3 to 6 month game. This is not buying into your popular stock on the stock market. This is not buying into Bitcoin with its extremely high beta. This is not one of those day trade type of deals. This is not a penny stock where you day trade it. This is your long-term cycle investing. That's what we talk about at Gold Silver Pros. That's why you come here. Long-term cycle investing, long-term value creation, macroeconomic events, those types of things to build long-term wealth. All right, that's going to do it for today, guys. Thank you so much. This has been
Hey guys, don't forget to hit that subscribe button and the bell for notifications, and go to goldsilverpros.com and sign up for the free newsletter so you can get your updates.